Welcome back, traders. It's the 18th of June, and it's been a couple of weeks since I caught up with you all, so I wanted to give you an update on what's happening at my end. First up, we have a whole new version of the BTMM-PRO EA. I sort of forked away from version 3 straight into version 4. It's a complete rebuild from the ground up. Can give you a little bit of a look at that. Probably a couple of 3 weeks away from releasing it, but it's going to be pretty amazing, and I'll show you why. So let's take a look at it. So here what you can see on the screen, top right, BTMM-PRO version 4.047. Means I've had 47 incremental updates already of this new code, starting right again from scratch. I've done a few things. I've taught Claude AI how I actually trade, and I've shared dozens of screenshots from my MetaTrader software showing the AI how I'm trading, when I'm taking my entries and exits, and that's been very helpful. I also I looked at Steve Maro's 2 days of webinars that total 8 hours. And I got another AI piece of code to transcribe that, and then I uploaded it to Claude, and I said, learn this, and Claude did. And Claude now knows as much as I do, and probably as Steve Maro himself does, about this particular strategy. So just looking at what we've got on screen here, there's quite a bit going on. There are no buy and sell buttons or anything like that yet. Quite a bit of information here that the software is serving up to me as the developer, just to tell me what's going on in terms of the cycle, where we are in terms of, we're in day 4 of the cycle. You can see here we've got a daily bias filter going, and a few other things, news, holidays, just key dates and times, and you'll see immediately here that this new software is all chimed into the New York session timings. So one source of the truth, which is the New York time. You can see at the bottom here there's another indicator. This is called the TDI, or the Traders Dynamic Index, and it's very powerful. Just to walk you through it, the 2 blue lines here are volatility bands. They're Bollinger Bands, but you should just treat them as a volatility. And what volatility is that when the market is highly active, as it was this morning after some major news, you can see here, you see that these blue lines spread apart, and we want to trade when there's a good spread of these volatility bands. You can see earlier that these bands were quite tight and squeezed, and you can see in the chart pricing there was quite a bit of, there were people sitting on their hands, not a lot of activity. So so those are the 2 blue bands, the volatility bands. The green line here is called the RSI, or the Relative Strength Index, and the red line is known as the signal line. And the basic strategy is that when the green line punches outside of the Bollinger Bands, or the volatility, and we're below this level here at 32, or above this level at 68, and the green line crosses back inside, this is known as a shark fin, and the red line, the signal line, is when it crosses that red signal line, it's known as blood in the water, and that's typically where we will get a reversal in price. It means a price reversal is absolutely imminent. And if you look up here in the chart, you can see that the price did in fact reverse sharply following the news. But my trading strategy has always been to wait for a breakout outside of the Tokyo session, and then act then. I don't trade the news. I don't recommend it, because you can never actually tell when this massive sell-off is going to end. You don't know where to catch it. I've been burnt so many times. So just follow my basic strategy, which is to trade the breakout, or the false breakout, which comes typically at the end of Tokyo, and you can see if I go back in time a little bit here, you'll see what we have is known as confluence. So you can see the Tokyo range here was basically consolidating for the first half, and then we had a breakout, a stop hunt by the big banks, and this is to entice traders to take a short position. And you can see at this point in time that that on the TDI, if I just blow that up a bit, you'll see that we had a breach of the band, cut back in, cross the signal line, and you can see on the chart here, this is the bank's intended trend, and that's where we want to get in. You'll see that I also have some lines on the screen here. There's a blue line, a purple line, an orange line, and a red line. The red line is known as the ketchup, the orange line is known as the mustard, the blue line is known as the water, and the purple line, well, I'm not sure what they call it anymore. I just call it the purple line. But basically, these are moving averages, and you can see that as the price moves away from the purple line, it snaps back to it, because these averages are always going to be tested by the market. And typically where you see the ketchup crossing over the mustard, and you see that we've had some activity above the 68 level on the TDI, and we're in the right part of the market, we're not in Tokyo, then a reversal in price is imminent. And this was the top of the London price range, and then we had a reversal back into New York, where that EMA 200 was tested. So the purple line is the EMA 200, the blue line is the EMA 50, the orange line is the 13, and the red line, the ketchup, is the 5. And if you put those moving averages on your chart, it will help you make a decision. So there's a thing we call confluence, which is where we have a number of conditions that have been met, and that really increases the probability of a trade coming off. So, you know, for example, we see the stop hunt out of Tokyo here. We see the crossing of the ketchup and mustard. At the same time, we've had a shark fin, and we've got blood in the water. It's crossed back across the signal line. That there is an ideal entry point for a long trade. So the retail market have all been sucked into going short. The banks have reversed direction. There's our entry point there, and we want to take a long position and take our profits. So how's it all been going with my trading? Pretty well, actually. On this Get Leveraged account, I've got a profit here of almost 9,000 US, but in actual fact, it's showing 7,000 because they take a whack of commission out of it. But that's still 7 grand US, which is well over, 12k New Zealand. I've been trading this account since the 20th of May. To show that to you, let's pull up my browser. Let's look at my dashboard here. You can see that this is my account. It was opened on the 20th of May, and I'm 58.76% of my profit target. When I hit $12,000, I will have passed my evaluation. Here are all the trades. But if you look at the statistics, this is pretty interesting. My win rate is 89.86% from the 69 trades I've taken since I opened this account less than a month ago. And, that's been pretty good. If we look at the trading calendar here, this is just June. So this is just since, since the 1st of June. Week 1 I made 28.30, week 2 23.45. This week's been a slow week, 5.41, and we can go back in time into different months. This was May. I started on the 20th. I had one losing day here where I lost $592 US, but it's pretty good to see that using this one strategy, I'm actually I'm very profitable, and it's a very reliable strategy. Yeah, what else can I show you? Yeah, well, the new EA that I'm building is based on 5 layers, and starting from scratch, we have a market layer, so we're interpreting price data and the various things. A signal layer where we look for the stop hunts and the different ranges and breakouts. A state layer, which is this is the machine cycle where we look through the various progressions in the cycle. Guardrails layer, which is yet to be built, but it's going to protect you from things like over trading and limit your position sizes and lock you out of news and protect you against high volatility. And then obviously the presentation layer where we show you everything on the chart. So this is work in progress, a few weeks away, but yeah, looking really, really good, and can't wait to get it out to you all. When I get it out to you all, I'm also going to send you this TDI indicator. You can't get this in MetaTrader 5, it's one that I've developed, so you'll get that. And I will show you how to add the moving averages to your chart. Very simple, just go to charts or tools, where are we? Insert, here we go, indicators. And then you want to come down to trend, and you want to come down to moving average, and you want exponential. So you want the 5, the 13, the 50, and the 200 with the colors that I've shown you, and you'll get those on your chart. So yeah, that pretty much wraps it up for this week. Wishing you all the best, and as soon as I have this ready to go, you'll get it. But you don't need it now. You can still use the current version 3. It's going to show you the sessions. You can add these moving averages. You won't have the TDI, but you know, that's coming. So sit tight, and I will be back with you very soon with a brand new version 4. It's going to be killer. And until then, happy trading. Cheers.